The long-term future of Bitcoin looks great, and the indicators are sending clear signals to support that. However, in the short term, things can still get shaky, and there's evidence for that too. Curious to know what kind? Let's dive in. Hey there! Welcome to another episode of Crypto Market Analysis, where we meet every week to break down Bitcoin, Ethereum, and an altcoin chosen by you. We get together and, as you already know, we take a look at the charts from 3 different angles: technical, on-chain, and our outstanding fire charts. This, in turn, means that you won't find such condensed analytical knowledge anywhere else on the internet as what we serve up here. We know you appreciate it. We see it through your subscriptions, your likes, and your comments. Thank you so much for all of them. But at the same time, I know that a lot of people who follow and regularly watch Kanga Trends still haven't subscribed to this channel, so now is the perfect moment to hit that subscribe button, give us a thumbs up, and also leave a comment as mentioned. And remember, the content in this material absolutely does not constitute investment advice. This is solely my own subjective opinion about what I see happening in the cryptocurrency market. I encourage you, on the other hand, to do your own research. So if you acknowledge this, you're ready. Grab your coffee and let's get started with the analysis. As usual, we're starting the analysis with Bitcoin, and we can see on the chart that it has reached our gray box, which is our supply zone. This gray box has basically been hit for the second time in a significant way with this kind of move, a short-term upward trend from below. And we can see that there is strong supply here. This supply is evident, for example, by the long upper wicks here, and it could also indicate that a double top might form in this area. But is that really the case? We'll get to that in a moment. But first, let's check what happened in the last few days in the context of what we discussed last week. And last week, I mentioned that Bitcoin still has the potential to drop to the $110,000 level, which is somewhere around here, marked by these 2 peaks. These 2 peaks that previously acted as resistance and could now simply become support. But that's not what happened. Bitcoin decided to end its downward trend right at the $112,000 level. That was also a level we had set for ourselves much earlier, one we were watching. And by the way, we kept saying it was still a buying opportunity, especially since at $120,000, remember, the hash ribbons indicator gave a buy signal. Of course, we'll talk more about that in just a moment. However, it's important to remember that such upward trends need to be verified using indicators. I'm going to turn on a few indicators now. The first one will be TD sequential, which, pay attention, is giving me a clear signal that this upward trend currently happening with Bitcoin might actually be coming to an end, at least in the short term. What could this mean for Bitcoin? Here we have the 9th candle of the TD sequential indicator. Here we had a similar situation, and as we can see, consolidation followed. In this case, the 9th candle of the indicator mainly tells us that a correction or consolidation might be coming, so this matches up perfectly. What's more, we can also take a look at other indicators. One such indicator is the RSI here, which isn't sending any alarming signals, but it does tell us that the 50 level on the RSI hasn't been clearly tested yet. So a potential price pullback is definitely justified here. Nevertheless, there is something that could signal a drop to a very specific level, and that's simply the CME gap. CME gaps are created on the Chicago exchange, where Bitcoin futures are traded, and when this exchange is closed over the weekend while the cryptocurrency market keeps moving, these so-called price gaps appear. And this price gap is exactly this green area that we can see here right now. This green area starts at the price of $116,955. And for me personally, this value is the first level of support. The second level of support in case of higher turbulence will be 112,000. The next one is 110, but in this case, it's already less likely. What do I do in such a situation? Well, first of all, even though I see the potential for the trend to slow down and reverse, I absolutely do not short Bitcoin, and I absolutely do not sell it. Despite everything, I see the potential to go long on Bitcoin precisely from the lower values of the CME gap. So if the price moves downward here, I will definitely open my long positions on Bitcoin. In the short term, Bitcoin looks potentially unstable, but in the longer perspective, it's worth looking at the weekly interval. I talked about the weekly interval on my Twitter. I do this regularly, and here I pointed out that Bitcoin rose by 4.5% last week and is holding the RSI nicely above 65. The MACD, despite everything, the one that's right here, is still in bearish momentum, which could indicate that there might still be a slight reversal here, but it's still worth noting that overall, things are looking really favorable. In the long term, Bitcoin looks very good here. What's more, on the RSI, we don't see any of those bearish divergences that could appear, for example, in the so-called overbought zone. So from that perspective, Bitcoin really looks safe. Let's also not forget about the buy signal on the hash ribbons indicator, that is our blue dot, which appeared here on our chart, mainly the weekly one 2 weeks ago and has been confirmed. In Bitcoin's history, this dot has appeared for the 19th time, and every time in the past it has signaled an upcoming rise. These increases varied, and we discussed them in detail in the previous episode last week. However, it's worth noting that this buy signal appeared at the value of $120,000. In the medium and long term, this signals further growth. In the short term, not necessarily, but this could mean that every time Bitcoin drops from this price, it's basically a buying opportunity because, as we know, this indicator is infallible. So far, will it be in the future? Will it stay that way in the future? We'll see. As for me, as long as it's infallible, I keep trusting it. And as usual, let's look at Bitcoin on fire charts. Let me remind you what fire charts are. It's mainly a visual summary of the order book from the largest cryptocurrency exchanges in the world. Here we see a blue line which shows us the price of Bitcoin, and we can see some horizontal lines. The brighter they are, the higher the buy volumes if they're below the Bitcoin price, or sell volumes if they're above. And we can see that, above all, there are a lot of resistances appearing in front of Bitcoin. Contrary to what you might think, these resistances don't actually have such high volumes because right now, as I'm recording this, Bitcoin is moving in a trading zone that carries volumes of around $30 million in Bitcoin, waiting to be dumped onto the market. Additionally, it's worth noting that at the level of 122,000, we have volumes of about 34 million, then at 123,000, 33 million, and at 125,000, 47, over 47 million. So it's not as big as one might have expected. These aren't values that could actually pose any massive resistance, but it's worth noting that below the current price, all the way down to $110,000, we don't see any significant buying clusters. That's why price turbulence here, like liquidating longs, for example, could actually happen. In other words, a price pullback, grabbing liquidity, and then a breakout upwards. Once again, I want to draw your attention to the CMI gap. It really could get filled. Nevertheless, we can see on the CVD that right now the price action buying activity is ongoing, and basically everyone is buying Bitcoin, everyone, even retail investors. That's our orange line here, which is slightly at the bottom, but still consistently rising. The momentum on Ethereum is extremely strong, so strong, in fact, that Ethereum hasn't done any consolidation at all, which we expected and which should have happened below the $4,000 level. What we saw here instead was a very strong breakout to 4,000, a pullback, a correction, a liquidity grab below 3,500, and then a breakout upwards. But watch out. Certain patterns are starting to show up on Ethereum that we've already seen on Bitcoin. So we're seeing the 9th bullish candle on the indicator, which is the TD sequential. And this 9th candle could be telling us that this upward trend we're observing here might be cooling off. Why? Well, mainly because the TD sequential is actually a pretty accurate indicator that tells us that at a certain point, at a certain moment, there might be a consolidation or simply a trend reversal. It has worked many times, although on this chart we can spot one place where it wasn't quite so accurate. It was right here, and it happened because of that strong upward momentum. We can see that despite a clear signal, the price kept moving higher. The consolidation and correction only happened later, and the correction basically reached the value where the indicator lit up. So, well, that's a bit too little. That's not what we expect from this indicator. But the question is, can the TD sequential work the same way 2 times in a row? Formally, it might be possible in the case of strong momentum, but it's becoming less and less likely, if only because Ethereum is now just below its all-time high, which, let me emphasize, Ethereum's ADH is exactly at this white line, and we can see that it's really a very short distance from the current price. Currently, at the time of recording this video, Ethereum is reaching the level of 4,700, well, 4,860 and a bit more. This is the value of the price peak, the historical all-time high in the case of Ethereum. Besides that, it's worth noting that, well, Ethereum is also in the overbought zone on the RSI where a bearish divergence is forming. This is exactly our bearish divergence on the indicator. And here we have the opposite movement, which we can see on our price chart. So this is a very strong divergence, which could result in the price pulling back. Especially since if Ethereum breaks through its previous all-time high and sets a new one, all wallets that have ever bought Ethereum will be in profit, which only increases the selling pressure. And now, fire charts for Ethereum. And here we can see that from the current price level up to around $4,800, there are indeed sell clusters, supply clusters appearing on Ethereum, which could push the price lower. What's more, below the current price, we don't see any liquidity here at the moment, so this drop could happen and it could be quite dynamic. It's also worth paying attention to what's happening on the CVD. And here, I'll mainly point out two lines because most of them are behaving in a coordinated way and are already cooling off a bit. Still, it's worth noting what the whales are doing, that is, our brown line, which currently seem to be gently pulling out of the market, while the retail investors, represented by our orange line, keep soaring upward. Retail investors are buying, whales are selling. So let's answer the question ourselves. What has this usually meant historically? The altcoin you've chosen for today's analysis is NEAR protocol. NEAR, which is basically making its debut on Kanga trends. And it's worth noting that, looking at the broader perspective first, NEAR is still in a very clear downtrend. This downtrend, basically, well, I don't see any sign that it's going to end anytime soon. There are potential signals suggesting that maybe it could, but they're not particularly clear. First of all, we can see a double bottom here. A bottom that's formed very regularly in a very similar area. We'll highlight it with our horizontal line, and we'll see that the price bounces off exactly the same point very nicely, but at the same time, we don't see any other pattern here that would indicate a clear rebound. However, we can see that these peaks are consistently lower highs, which means we might be seeing a descending triangle here, which would be a continuation of the broader trend we're currently observing. That's why, for me, NEAR protocol is currently a cryptocurrency that I can only trade in the short term. Let me also turn on the RSI to check something, and let's add the TD sequential here as well, since it's been lighting up on a lot of cryptocurrencies lately. Well, in the case of NEAR, that's actually not happening. However, we can see that NEAR is bouncing very nicely off the 50 level on the RSI and is trying to move upward. To what value? Well, in my opinion, a realistic target is $3. That comes basically from the peak that was reached here a few weeks ago. If that level gets broken, then NEAR could aim for $3.38, which is exactly the peak we had here. Only after these values are broken through, when the $3.30 to $3.40 level is surpassed and confirmed from above as support, can we say that the double bottom we see here is a legitimate bottom and could indicate a real trend reversal. For now, we can't talk about a trend reversal yet. As I mentioned earlier, NEAR looks quite interesting to me for short-term trading, but not particularly appealing when it comes to long-term trading. Meanwhile, on fire charts, the $3 level has been confirmed as resistance for NEAR because we can see that sell clusters are appearing here, and there are some sell volumes right at this level, just below the current price. We don't see any broader support levels, so this basically reflects what's happening with both Bitcoin and Ethereum. And we can see that currently NEAR protocol is being bought mainly by retail investors, because our orange line here keeps rising. We also see, for example, the green line. These are wallets that hold between $1,000 and $10,000 in their balance, used to buy NEAR at current prices. The other wallets are, well, keeping a bit of distance from the market. And if you'd like to at least analyze your own altcoin, remember that it's a very simple thing to do. All you need to do is register on Kanga, and you'll find the registration link in the description of this video. Look through the cryptocurrencies we have and choose the one that interests you the most. Just remember 3 basic rules. First, it has to be crypto from Kanga. Second, it can't be KNG. And third, it can't be any meme coin. So you know what to do. Comments are open. Go for it. Now, just briefly about the spot Bitcoin ETF market in the United States. Here, the scenario of a potential consolidation seems to be playing out. Why? Because the buying bars we've been seeing here in recent days, even though they're still there, 5 buying bars in a row, are relatively small. They're not as big as what we saw, for example, in July or even back in June. That's why a consolidation, a slight cooling of the trend, and a cooling of indicators like TDX or RSI is completely justified. And of course, in the case of Bitcoin, filling the gap, that is, our price gap, is also relevant. Time for connection analysis. And today, I've prepared 3 indicators for you. 3 indicators that tell us quite a lot about what's currently happening on the market. First of all, let's start with SOPR and our 14-day moving average, which we regularly use on this indicator. As we can see, in the current bull market, SOPR has repeatedly reached around 1.06. This time, however, it has broken through that value. That value is a threshold, very often signaling a correction or simply a consolidation. We can see that today, at the moment we're recording this material, SOPR is already gently resetting and dropping below. Nevertheless, it still remains high, so a correction in the case of Bitcoin, even a slight one to cool down the indicator, is very much justified. One of my favorite critical deviation indicators is NPL, or net unrealized profit and loss, unrealized profit, unrealized loss, which is an indicator that every time in every bull market, when it reaches a value of 0.75, it has meant that we have a peak here, whether it's a local peak or the peak of the bull market. So at the current moment, it's worth monitoring and checking exactly what level it's at. Especially since in the current bull market, it's behaving a bit differently. Why? Because it mainly reaches values around 0.63 to 0.64. And from those levels, local corrections occur. These aren't the bull market peaks yet, as we know, but corrections are still happening. And currently, right now, at this moment, the NPL is at 0.56, so theoretically, considering only this one indicator, the growth potential is still very large. But let's remember that the NPL is a long-term indicator, not a short-term one. In the short term, it can reach certain values, but it won't tell us how long it might take to reach those values. Lately, we've been regularly paying attention to what's happening on the exchanges in terms of Bitcoin balance. And in our last video, we mainly talked about how in mid-June, a bottom was reached, a pretty low level when it comes to the amount of Bitcoin on exchanges, and since then, we've been seeing an upward trend. Today, as we can see, this upward trend is still holding, which means that the supply of Bitcoin at the current price remains high, at least relatively high, because as we know, ETFs are still scooping up much more from the market, even though in recent days we've seen a slight cooling off. Nevertheless, it's worth paying attention to this indicator once again and remembering that when we see worrying signals on technical charts and the amount of Bitcoin on exchanges remains high, the selling pressure is also high, which could indicate a possible correction or simply a period of consolidation. It's time for a contest. Let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video, so it can be Bitcoin, Ethereum, or NUPL protocol. Present a technical, on-chain, fire chart, sentiment, or fundamental perspective, whatever you like, and remember, you don't have to agree with me. The author of the most interesting comment, posted by Friday at midnight, will win 20 KNG from me. And the winner for the previous episode is Michael Nickpone, who analyzed Bitcoin. Congratulations, Michael! Please contact support to claim your prize. That's all for today. If you enjoyed it, and I truly believe you did, and you still haven't subscribed to this channel, make sure to hit that subscribe button. Also, please rate this episode on a scale from 1 to 1,213, where 1 means it was bad and you never want to see it again. 1,213 means it was fantastic and you want more of it. And if you want more, then I'll see you next week. Bye.